What is a mortgage loan, and what types of mortgage loans are out there, and how do you choose the right mortgage loan for you, and what's the mortgage loan application process? So mortgage loan is just a loan that is for the purchase of a home or for the refinance of a home. So it's tied to the home. That's the collateral. Mortgages are typically fixed or variable. Typically here in the United States, they're 30-year terms. The cool thing about that is overall it decreases the payment because you're paying it back in such a long time frame. So it makes the home more affordable for you. The most common loans that I do are probably for first-time home buyers are our FHA and our 5% down conventional. Both of those loan programs are perfect for you if you're renting a home and thinking of buying your first home. You don't have a large down payment, but you have some funds and you just want to be able to buy a home. We can typically help you with one of those programs. Probably the thing that I think catches a lot of people off guard in terms of not knowing but finding out is that the funds from the 401k are a great source of funds for your down payment. A lot of nurses and police officers and other folks, teachers that have helped buy their first home, they ended up using some funds from their 401k, and you're not paying a penalty when you're using those funds for the purchase of your home. So, why not use that as a way? It's kind of an investment too. When you buy a home, think of it also as an investment. So it's not like you're pulling funds out of your 401k investment and spending them on something. You're moving from one to another and helping yourself out in the meantime. How do you choose which mortgage loan to get? Well, you probably don't. Typically the lender, the loan officer that's helping you with the process, directs you on the options and then you choose together. That's the most common way of selecting your loan. I know some folks, they really do all their research and they look things up and they say, Nathan, I want to get this loan. And that's fine. Sometimes they're shocked when we find out that there's something else that might be a little better for them. So you'll work through that with your loan officer to figure out the right fit, the perfect loan for you. And then in terms of the application or the purchase process, what is that like? Well, my process is pretty simple. I have a web page with a link. Click the link, and you fill out the digital application. And then when that comes through to me, I complete the pre-qualification section, call you or email you, and we go over all of the information. Some questions, we talk about payment, we talk about cash to close, we talk about your debts, your assets, time frame, your plans, and then we set up your pre-qualification. Once we've done that, we'll set the stage for the next step, which is setting up your pre-approval. We'll typically request documents for the pre-approval, and then we'll set up a consultation call. Once you're pre-approved, we'll have that call and it'll be a plan on how to buy a home. So it's not just, hey, what's in your checking account? What's in your savings account? What's your income? We've switched gears. That's all pre-qualification. Pre-approval, it's more details. And then once you're pre-approved, it's all planning to buy your home. And part of that is strategy. Part of that is, working with a real estate agent or not, buying new construction or not, right? So all of that comes in after pre-approval. And so kind of the big circle is a application process for pre-qual will upgrade to pre-approval, and then pre-approval plan to buy. Boom, boom, boom. That's our general process for buying your first home. Okay, so the question is, how do I qualify for a mortgage loan? What's my credit score requirement? What's my income requirement? And what about assets? How much do I need to have in assets to qualify? So it's important that you have good credit. It doesn't have to be perfect credit. It could be good credit. You might have even had some issues on your credit and still may be able to buy a home. So don't let that dissuade you. Income, I like to think that in general, your total monthly payments for your mortgage payment and debts that'll show up on the credit report. So car payment, credit card, So your total monthly income should be double your total monthly debt payment. So if your mortgage payment is $3,500 and your other payments are $500, so mortgage payment $3,500, other payments, which credit card, auto loan, is $500. So in total, your total monthly outflow that we count is $4,000. Then your income to qualify needs to be at least $8,000 a month. So we're looking at double. Technically, it's higher than that. You would want to be more like 85 or 9 if your total expenses were $4,000. But as a template, that's kind of what I use. It's like 50%. And affordability-wise, that's where you would want to be on a max level. You would not want the payments to be any higher than that. You definitely don't want that, because we're also, the income that we're using the gross income. So we're using the income before taxes. You're not using that. You're using your income after taxes. So your actual amount that you have is less. So it's pretty aggressive, the qualification that's out there. In terms of assets, what do you need to have to buy a home? Well, if you're a veteran, if you're VA veteran, you can buy with 0 down. Keep in mind, you'll still have closing costs and prepaids. You may have some other expenses included, so you have to factor those in. But if you're not a veteran, you can buy in certain areas with 3% down, 3.5% down, 5% down. So those are kind of the lowest ranges for the down payment. And we kind of go over those with you. Most common is 3.5% down FHA loan. Pretty much everyone would qualify for something like that as long as they have decent credit, currently working, and down payment funds, 3.5%. It's very, very common that we do that program. And then in terms of assets, we can use gift funds. We can use funds from 401k, but they have to be sourced in season. They cannot be mattress funds. They can't be cash that you've got stashed away. That's the one kicker, is when I have a buyer that wants to buy a home that has money outside of the bank and they want to buy the home. So that's when things have to be planned out a little bit better. So with regards to assets, especially with the PATRIOT Act, we have to source, season, and paper trail all funds used to buy real estate. So it's important that your funds that you're going to be using to buy your home are in your bank accounts and not in your safe in your bedroom. So question, how much can I borrow with a mortgage loan in terms of a home? Well, you could borrow almost the whole purchase price, depending. So 5% down, you're borrowing 95% of the value. Now, is the lender going to ask you for a lot of documentation? Yes, they're going to verify the heck out of everything. And you should know that. You should be prepared that. You should provide as much information as you can, because think about it. They're paying 95% of the home. You're only doing 5%. So when you're applying for a loan and the lender's asking you for your pay stubs and you're not providing a clear copy, or here's the most common, bank statement. We need the bank statement. It has to have all pages. This is easy if you go to your online banking and you save it as a PDF file and forward it. But if you have a physical hard copy and it's front and back, that's a pain, because then no one can do the front and back copies and send all those over to us. So what do we get? We get pages 1, 3, and 5. We miss 2 and 4, the back side of the pages, right? And you could say, there's nothing on those pages. It was blank. It doesn't matter. We need all the pages. It's ridiculous, yes, but it's required. Because again, the lender is basically putting up 95% and you're only putting up 5%. So take the time and get all the documentation in that the lender needs, because they are the ones that are putting out more money there. Can I buy a home with poor credit or no credit? In the years that I've been doing this, I've helped folks buy homes with poor credits, and we need something to compensate for that. We also need to have a reason, right? If it's poor credit and there's nothing that's going to change it from continuing to be poor credit, then no, we don't. It's going to be very hard to buy a home if you continue down that path. But maybe you have poor credit or low credit score because something happened a few years back and maybe that something has been fixed and all is good now, but your score is still low. We can work with that. What about if you have no credit? Well, that's tough. How do we determine if you're going to repay the loan if you have no credit history? Well, we have ways of building credit super quick. I'm not going to tell you our secrets, but we can help with that. So no credit, something we can help with. Poor credit, absolutely something we can help with. It just has to be something there to work with. Can I get a mortgage if I'm self-employed? Can I buy a home if I'm self-employed? Yes, we do those loans all the time. So difference is we're not using W-2s and pay stubs, we're using tax returns. And the biggest difference in how it affects you, the buyer, is it's based on averages. And so you could be doing great right now, right? This month, last month, you're making a ton of money with your business. Doesn't necessarily mean that that's going to help you qualify for the purchase of your home. We got to look at your last 2 years' tax returns. So in reality, we're going back almost 3 years in some cases. Right now, beginning of 2023, we would want 2020 and 2021 tax returns. Unless you've already filed your 2022 tax returns, then you can use 2021 and 2022. But that's a ways back. That's a lot's changed since then, right? So that's the biggest challenge with self-employed, is going back in time and then using that as your kind of average for income. There are ways though that we can decrease the average period of time by going 1 year tax returns. And there's also other ways we can help self-employed borrowers. For instance, bank statements instead of tax returns. That's another way that we can help self-employed. Everything's kind of case by case, but we have a lot of experience in working with self-employed borrowers. So it's good to let us know, and then we can work with your situation, see what we can do to help. So what is a mortgage credit report, and how do you get one? What's the difference? Someone asked me this because when you or I or anyone else, when we look at our credit score, that's our consumer credit score. So for instance, if I'm on my Bank of America online banking website, my credit score on there is my consumer credit score. It is not the same as my mortgage credit score. And you'll know this, as soon as you apply for a mortgage, you'll get your credit score, and it's not going to match up with the consumer scores that you have on all of the online methods that you're using to track your score. The other thing to keep in mind is a mortgage credit inquiry is not viewed as a negative hit on your credit. It's looked at differently. The CFPB changed this years ago when they brought out the know before you owe. And they made it so that it's okay to check your credit. It's okay to shop your mortgage. There's a period of time that you have to be able to check your credit and shop your mortgage. They don't want you to work with the wrong person when you're buying a home. They want you to be able to choose the right lender. And so you have a window. You can use that. You can shop and you can find the right lender and you can use that lender. Be careful though, you will get a ton of phone calls from solicitors when you're at a credit inquiry on the purchase of a home. So all the mortgage companies will call you to bug you about that. So do not call list, it's a good idea. And then also some of us have a way of blocking the solicitation calls when we order the credit report, and that helps out our clients as well. But with regards to the mortgage credit report, that's something that just a mortgage lender would have. You would not get a copy of that. That's something that just we have, but we're happy to go over it with you. Consumer credit report is something that you would have. So how does my rental history affect my mortgage application? Well, in some cases, especially if you're buying your first home, you may not have a lot of credit. You could have some credit cards, maybe a car loan, something like that. But as a mortgage lender, we want to see how you repay things. We want to see how you repay your car loan. If everything looks good, but you have limited credit, it's tough. But what if you've been renting an apartment for a year and a half or 2 years? Well, that could help, especially if you're paying it on time every month. That could definitely help. So getting that evidence, and we just do a verification of rent, adding that to the equation could absolutely help you qualify, especially if you have limited credit and you're trying to buy your first house. doing that verification of rent with the landlord. That's something that we do internally. We just need the contact information for the landlord, and we get that for you. That could absolutely help you qualify to buy your first house. So, is it important that you're paying your rent on time? Absolutely, just like anything else. It's like a giant responsibility meter. The better you are at doing all these things, repaying debt on time, keeping the balances of your credit cards low, just managing your finances in general, the better you're gonna have, the better luck you're gonna have when it comes time to applying for a mortgage. That's just kind of how it works.